Most income investors are asking the wrong question. They're chasing yield. But what if the real question is, what actually happens to your money over time? Today I ran a full back test on GPIQ, not just the yield, not just the monthly payouts, but the total performance. What happens in drawdowns? What happens in rallies? What happens if you reinvest? And what happens if you don't? Because high income is exciting, but results are what matter. Let's look at the numbers, so stay tuned. Welcome back to Simply Money. Thank you for joining me today. Today's video, we're looking at GPIQ and we're doing our full all-in scenario backtest. What if we had bought GPIQ with our full portfolio from Inception? Where would it be at? Doing different drips, full 100% drip, 50% drip, zero drip, and then a variable that we'll look at. If you're new to the channel, thank you for joining us. And don't forget, this is for information and educational purposes only. This is not financial advice. Please do your own due diligence. For our returning subscribers, thank you so much. I appreciate all your support. Don't forget to hit that like, and if you haven't already subscribed, please hit that subscribe button. It really does help us out. All right, here we go. Looking at the chart, we have January 1st, 2024, our price of $43.24. GPIQ is a monthly paying distribution, and with our $525,000, that would have got us 12,142 shares. Let's dive into the numbers. Going down the columns here, we have our date. Each month we're looking at this, what the share price was at that date, and what was the distribution amount for that month. Beginning in January, we had the $43.24. It paid a 37-cent distribution. So we come down, let's look at the share price first. We see that it has been going up. We did have a slight drawdown here during Liberation Day, where all stocks and ETFs were liberated from their highs and they got to new lows. But guess what? They returned and rebounded just like they usually do. No matter what the market says, no matter what the news cycle is, those downturns scare people, but long term they come back up. As we can see now, we're at 59.38 as of the beginning of February. So in that time frame of 2 years, we're looking at a 37% growth of the share value, of the share price. So that's nice on something that's paying a nice distribution to see that it grew about 18% each year. That's a nice growth rate for something that's also paying a hefty distribution. What are the distributions monthly coming from this? Let's see, we started out at 37 cents, 38 cents. Let's just kind of scan down. We don't see it really dropping. It's staying right in that, got up into the early low 40-cent range. It did dip down again during just after the liberation, down to 38 cents again, but it has rebounded and gone back up. And now we're looking at the last three of 47, 46, and 46 cents. In this 2-year time frame, it has averaged just under 42 cents per month. And it's been pretty consistent with that, with slight growth. It's slightly going up. The trajectory is on positive, which is good. It's nice to see that as well. So far with GPIQ, what are your thoughts with it? Are you bullish on it? Do you like it? Do you own it? Give me your thoughts in the comments down below. So far, what we're seeing in the stock price and the distribution, we're seeing nice, steady growth, which is good to see. Now, with the full drip on, you can see what the amount that we get paid. So looking at column D, this is the amount we get distributed in cash, and we're reinvesting it totally. So this first month, we got $4,559. We bought more shares, so our share total went from 12,142 up to 12,247, which we're tracking right here in column G. Now, following that, keep coming down. Let's just see how this is growing, because we saw the distribution is growing, and we're seeing that we're adding more shares. So you started out at $4,500 a month, got up into the $5,000. Now look at this, the last 3 months, 7,000, almost 7,000, almost 7,000. So 3 months in a row, it's been at $69.99, $69.29, $69.56. So that's a nice steady growth of income that we've been seeing over 2 years. $148,000 has been reinvested, getting us 2,990 more shares. Again, I'm going to pause here. Leave your comments down below. Are you liking what you see with GPIQ? What are your concerns with it? Okay, now let's look at the 50% drip for those who are new to the channel. The 50% drip column, this is not the full amount you're seeing here. This is 50% of it. This is half of what is being given to you. So you take this amount, $22.79, you double it. That's the distribution. What you're seeing here, we're showing half because half of it, this amount, is going to buy new shares, which we calculate over here in column H. But you're also getting the same amount, so you get this $22.79 again as cash. So we'll accumulate that so you can see how much am I getting for cash? I just looked down. How much is being reinvested? I just looked down. This shows you whichever one you're looking at, that's what you're getting, that amount for reinvesting and that amount for cash. As we come down, with a 50-50 distribution, you see again, it is growing month over month, obviously not as fast, but now we're looking at getting $3,000 a month and we're buying more shares. So we've gained 1,416 shares. We've received $70,000, so $35,000 a year for the last 2 years. Not too bad. And finally, the zero drip. With zero drip, we're taking the distribution, this amount, as cash. So we're not adding any new shares. What you start with, 12,142, is what you end with. So your distribution is growing because the distribution amount per share has been growing. Now, if this drops, you'll see this distribution that you're receiving drop because you didn't add any more shares. But we're still seeing some growth. We started at $4,500. So we come down here to the end. You see we're ending at about $5,600. So you've gained about $1,000 a month as you've been taking this. So if you were invested in this, and again, I wouldn't recommend putting all your money into GPIQ or any fund, but if you did, this is what you could expect, that it would be growing your living. So you're getting $4,500 a month to live on, and you're getting a raise month over month for the most part. Sometimes it goes down a little bit, but long term, you have increased how much you're getting. Over 2 years, you've got $132,000, $66,000 a year that you've received in distributions, and you haven't touched the number of shares you have. What has happened to your portfolio in these three situations? With full drip, you see your distributions grew astronomically up to $6,900 a month. And you look over here, your portfolio balance has grown up to almost $900,000. In 2 years, you have almost doubled your portfolio balance with a full drip. $373,000 gain. Not too bad, a 71% growth rate in 2 years. With the 50% drip, you only grew it, and I say only, you only grew at $280,000, but you also received that $70,000 cash because remember, $70,000 was cash and $70,000 added these new shares. You have $70,000 in cash and you grew your portfolio by $280,000 in 2 years. I'd be very happy with that. How about you? Now, finally, no dripping at all. You started with the same number of shares. You've received $132,000 in distributions, and get this, and you've grown your portfolio by almost $200,000. Now, I would be very happy with that. If I was retired, I'd put all my money, this income portfolio, into this one fund. At 2 years, I would have received $66,000 each year for spending, and my portfolio is up $200,000. I'd be very happy with that. But again, I would not do that. Let's say we took a chunk of it and we put $50,000. Okay, again, these are smaller numbers, but on a $50,000 chunk that we're putting in there, it's to supplement our income. We're getting $400 to start with each month. At the end of this is no drip. We're getting $500 a month. So we've received a raise. We're getting $6,000 a year on average. And we grew our portfolio from $50,000 up to $68,000. So it's just a way to play with this. If you like these spreadsheets, you can get a copy of this GPIQ in the Buy Me a Coffee link down below. All of our spreadsheets are available there. And we do that so you can play with these and put your own numbers in. On this one, you can put your start date that you invested, how much you invested, and see on the different drips what it's done. That brings us to our total return here at the bottom. This takes the growth, what your unrealized gain in the portfolio is, and because the full drip, there's nothing other than that, you've received 71% growth. That's pretty healthy growth rate right there. With the 50% drip, you've received $70,000 in cash, and your unrealized gain in the portfolio is $280,000. That's a $350,000 growth, or 66% growth over 2 years. Again, very healthy. Now, no drip, you've increased your unrealized gain by $200,000, and you've received $132,000 in cash, a total return of $328,000, or 62.5% return. Very healthy returns there. That's your total return. Very healthy. Again, 2 years, short time frame, been 2 positive years in the stock market, so it hasn't been through a bear market, recession, anything of that nature. It's had some downturns with the tariff, but it's good to see that after a downturn, it did recover very nicely, which is good to see in this type of fund. And so we hope that would be the case. How would it impact long term? 2 years, you'd have a slight pay cut or decrease, or maybe it'd be static for a while. But then hopefully when it began rebounding, you'd see that begin to increase again, and then long term grow and settle back down. Let's look over here at our 2 calculators. Our calculator 1 is if we change the drip percentage. And we do this because some funds, as you've seen on the videos, if you do these drips, that by the end of the time frame, you're actually in the red. With these, you're not. So with those, we'd want to put like how much would we need to keep the balance at what we began with. With this, we can just play with it. Let's say I want to just drip 30%. I'm going to keep 70%, so I need $3,000 a month with slight pay raises. And over the course of 2 years, you've grown your portfolio by $245,000, and you've grown your monthly income from $3,000 up to $4,000 a month. That's a nice way to play. So I don't need the full amount, but I do want $3,000 a month, let's say. So how much do I need to drip? And it's just a good way to play with that and kind of see what you want to do with it and how it impacts the outcome. On this one, it's a dollar amount. You put in the amount you want. So here I put in $3,000. Now there's no cost of living in this one. So you have the $3,000. It's going to stay $3,000, which means the amount you're dripping is growing, because as that distribution grows, you're still taking out $3,000. Instead of reinvesting $1,500 at the beginning, you're still getting $3,000 in cash, but now you're reinvesting $4,000. You grew your portfolio by $280,000. We could change that, say, okay, I want $5,000 to start with. You can see I'm actually negative, so I'm having to, quote, necessarily sell some shares to get down to the amount that I want, $5,000 a month. But it still grows, and eventually it gets to where it's positive, and by the end, you're still reinvesting $2,000 and still getting your $5,000 a month, and by the end of the time, you've increased your portfolio by $216,000. You could do this in a big way. Say I need $7,000 a month. What would that do? It starts you out really bad negative. You can see you're selling shares and taking the distribution, but eventually it's getting close to catching back up. We didn't ever quite get positive. We got real close here to 99 cents. We had to sell such a small fraction of a share that month to get our $7,000. I'd imagine you just take the $6,999.01 and not sell a fraction of a share, but it's just the numbers that are running. So you could see, like in that scenario, like what would have happened, you still would have grown your portfolio by $153,000, just not as much. And eventually, hopefully, if this continued, you'd start getting in the positive and growing this again. So just ways to play with that and see, based on what your needs are, what do you need to do and how to play with that. What are your thoughts on GPIQ? Are you an owner of GPIQ? Have you owned it in the past? Are you thinking about it? Share in the community below what are concerns you have. What questions do you have? And don't forget, I appreciate so much all of the suggestions on funds you want to see, because I have funds I look up and you may not care about it. I want to do the funds you guys want to see. So leave me comments down below. What fund do you want to see me do these scenarios on and backtest them? And don't forget to check out our income versus growth ETF Showdown playlist where I put up things like QQQI versus GPIQ, which one does better in dripping modes and which one does better in living off the income versus selling shares. And I want to do more of those as well. Leave some of those in the comments for me as well. I appreciate those. It helps me plan what is needed and desired by the audience. That's it for today. Hit that like and subscribe button. Thank you for joining me, and we'll see you next time on Simply Money.